Imagine a country that once had billions of dollars. Enough money to build roads, hospitals, schools. Enough to secure the future of the next generation. That country was not destroyed by war. Not devastated by disaster. Not brought down by a global crisis. Instead, it is slowly collapsing because it is running out of time. For more than 2 decades, this small nation lived off a single source of wealth, oil and gas. Money flowed in steadily. The country built a sovereign wealth fund worth tens of billions of dollars. A national savings account. A safety net. A promise that the future was secure. But today, that source of wealth has dried up. Its oil fields are silent. The engine that once powered an entire nation no longer produces anything. Now, this country no longer lives from its economy. It lives from its savings. And every year, those savings grow thinner. There is no panic. No chaos. No sudden collapse. Just one undeniable reality. Their time is running out. This is not a story about war. This is not a story about poverty. This is the story of how a nation can have billions of dollars and still stand on the edge of uncertainty. This is the story of Timor Leste. Today, the country still holds around $18 billion in its sovereign wealth fund, known as the Petroleum Fund. For a nation with a population of only about 1.3 million people, that number appears enormous. In theory, it should be the foundation of long-term stability. A national safety net. A guarantee that the country has time to build its future. But this figure hides a far more serious reality. Every year, the government of Timor-Leste spends roughly $1.5 to $2 billion just to keep the country running, to pay salaries, build infrastructure, and keep the economy afloat. The problem is that their main source of income, oil and gas, has almost completely disappeared. Which means the country is no longer funding itself through productive economic activity. Instead, it is financing its existence by withdrawing money from its own savings. This is a fundamental shift. Timor-Leste is no longer operating an economy that generates new wealth. It is running a system that slowly converts old wealth into time. Every dollar taken from the Petroleum Fund is not the result of new economic growth. It is a piece of the past being consumed to sustain the present. And that changes everything. Because now, the most important question is no longer how much money they have left. The real question is how much time they have remaining. For nearly 2 decades, one place carried the weight of an entire country. Its name was Bayu-Undan. A gas field in the Timor Sea that, since the early 2000s, had been the main source of Timor-Leste's wealth. This was where the money came from. This was what financed almost everything. At its peak, more than 80 to 90% of government revenue came from oil and gas. That meant nearly every function of the state, from public spending and development to economic stability, depended on a single source. A dependency this extreme creates vulnerabilities that remain invisible in the short term, but become deeply dangerous in the long run. Because resources like this do not last forever. And when Bayu-Undan finally stopped producing, the impact was not just a temporary drop in income. This was not a fluctuation. This was not a cycle. This was a structural change. The country did not simply lose part of its revenue. It lost the main engine that had sustained its existence. This is what economists call the resource dependency trap, the danger of building an entire nation around a finite asset. When a country's stability relies on something limited, the end of that resource is not just the end of production. It is the beginning of uncertainty. And today, Timor-Leste has reached that point. They did not spend the money immediately. Instead, they placed it into a sovereign wealth fund known as the Petroleum Fund. The goal was clear: to transform temporary resource wealth into permanent financial stability. The model was inspired by countries like Norway, a system where natural resource revenues are invested,
and the nation lives off the returns, not by consuming the core savings. In this way, even after the oil runs out, the country would still have a steady source of income.
That was the theory. But reality turned out differently. Over time, the government began withdrawing more money than it was supposed to. Not just using the investment returns, but dipping into the principal itself. It was a change that seemed small at first, but carried enormous consequences. Because a sovereign wealth fund can only last forever if a country lives from its investment earnings. Once a nation begins spending the principal, the fund is no longer a permanent foundation. It becomes a finite reserve. And when a country starts consuming its own financial foundation, what disappears is not just money. What disappears is the time it has left to survive. Amid this uncertainty, one name is constantly mentioned as the great hope for Timor Leste's future. Greater Sunrise. A massive gas field in the Timor Sea, believed to hold billions of dollars in potential. If developed successfully, it could revive the country's flow of revenue. It could provide breathing space. It could extend the time they have left. For Timor Leste, Greater Sunrise is not just an energy project. It is a second chance. But this opportunity comes with a clear limit. Because Greater Sunrise does not solve their fundamental problem. It only postpones it. Natural resources, no matter how large, always come to an end. That gas will run out just like Bayu-Undan did. Which means the greatest value of Greater Sunrise is not the gas itself. Its greatest value is the time it can buy. Time to build an economy that no longer depends on a single source. Time to create new sectors, new industries, new streams of income. Because in the end, Timor Leste's future will not be determined by how much gas it has. It will be determined by what it builds, before that gas is gone. This is the crossroads faced by every resource-dependent nation. Some countries use that time to transform. Others simply delay a decline they never truly prevent. Timor Leste's main issue is not how much money it has. The problem is the structure of its economy. For years, the country's economy was never built on a strong industrial base. Its domestic tax base remains small. Private sector activity is limited. And much of the economic circulation depends on government spending that has been financed almost entirely by oil and gas. Which means that when revenue from those resources disappears, there is no alternative economic engine strong enough to replace it. This is the real risk. Without diversification, Timor Leste could shift from being a nation supported by resource wealth to a country dependent on external aid. That outcome is not inevitable. But it is a very real possibility. Because history has shown the same pattern in many countries. When the main source of wealth vanishes before a new economy is built, nations enter long periods of stagnation. Timor Leste now stands at a decisive moment. This is not just about one small country in Southeast Asia. It is a much bigger question. What happens to a nation when its primary source of wealth disappears before its future is ready to replace it?